In the bid to build the next generation of payment structure, what are the formulas to maximize financial inclusivity? Joining us in this next conversation are Dr. Patrick Njoroge, Governor of the Central Bank of Kenya, and Her Excellency Siri Chia, Assistant Governor of the National Bank of Cambodia. Moderating the conversation is Dante Disparte, Chief Strategy Officer and Head of Global Policy at Circle. Let's head over to hear about the race to build the next generation payments infrastructure.
Well, thank you very much. It is 4:40 in the morning here in Washington, D.C. It is 5:40 in Singapore, 4:40 in Phnom Penh, Cambodia, and 12:40 p.m. in Kenya. And so much of the world's needs today are powered by the internet, an always-on global phenomenon that has allowed for global connectivity, frictionless exchange of information, and content and knowledge all over the world, armed with little more than a phone. And so what better way to ask a question of, what better guest, I should say, to be able to dive into the questions plaguing not only competitors in the financial system and in the payments domain, but also amongst central banks themselves, than Her Excellency Siri Chia and Dr. Patrick Njoroge, both leaders in the central bank domain, and I know very, very careful observers of what has been transpiring in the next generation of payments infrastructure. So I'd like to begin perhaps by just asking a question to contextualize the first choice I think many have to embark on from the public sector is, what is the right payment infrastructure approach? Public, private, or hybrid? Maybe I could start with you, Her Excellency.
Thank you, Dante. I didn't realize it's that early on your end.
For Singapore, I'm always on.
Well, to your question, I think there's no right answer. It's really depend on the level of the financial sector development of that particular country. I think if you already have a private sector that is already efficient, then you may just let it be. On the other hand, if you have a private sector that fragmented, like the case of Cambodia, then you may need the public to come in. And I think at the end of the day, to me personally, the best solution is collaboration. So a hybrid solution of the two, where you've got the efficiency of the private sector, but you have the inclusiveness mindset of the public sector. Well, just the efficiency of the private sector and the inclusiveness mindset of the public sector.
That makes sense. And so if money is a public good, perhaps the rail network on which money travels, which ultimately is the question about this next generation payment infrastructure, could potentially be public, private, or a hybrid model. And so, Dr. Njoroge, in the Kenyan context, and in your view, not only of what is transpiring in Kenya in the payments world, but from the lens of a central bank governor, how do you see that public or private choice?
Thank you, Dante, and I'm glad to be here. Thanks for the invitation, and great to share the stage with our High Excellency Chair Siri. On the question, actually, I would just support what High Excellency just mentioned a moment ago, which is actually there is a choice. There's a choice, and in many of these things, there's always a choice which way to go. For those countries that have a very advanced private sector, or have a lot of, let's say, activity in this space, obviously the point there is supporting the private sector, and the public sector will be there to regulate, etc. But occasionally, you do have those instances where you may want to categorize, let's say, to push the development. And in that case, the public sector could step in. But it is important to not to stymie innovation and actually lead, and then let the private sector develop and create the ecosystem. So there isn't any one-size-fits-all approach, but I think the regulators and indeed the public sector should be very conscious of the long-term where we're going. Thank you.
Thank you. So obviously, as I'm sure we're seeing on display at Singapore FinTech Week, the evolution, the speed, and the rate of competition on different types of payment infrastructure standards including proprietary technologies as well as open source technologies, is advancing very fast. How does a central bank, and from the lens of monetary policy in a domestic setting, how do you ensure that you don't import technology risk or obsolescence risk in some of these choices? Is it free market competition? And or are there ways of ensuring a much more evergreen, long-range approach to payments infrastructure? And this is, I suppose, an open question. If you feel an urge to respond, I'm happy to have either of you comment on it.
Well, maybe I start. And I think, again, this is, there is no one size fit all answer where proprietary technology or an open source technology is better. Right? Again, it's depend on the situations where we're in. There are different concerns for different countries. There can be concern about cybersecurity when you use an open source technology where the people can know the architecture, the foundation of your technology. There's also concern about national security as well, and that we have to build in. In terms of the speed of development, definitely we've seen, the pandemic has accelerated the adoption of this technology. And certainly for Cambodia, during the pandemic, we've seen an increase just between Q2 last year to Q2 this year. We've seen electronic transaction increase by 350% in volume and about 200% in value. And that is really significant for countries like ours. So going forward, it's also on the shoulder of the regulator to make sure that there is safety and efficiency in those transactions, and that there is the right competition in the markets.
And no doubt, the pandemic has been a major multiplier of technology adoption. I mean, one of the questions I'd like to ask both of you, and perhaps Mr. Honorable Dr. Njoroge, we could ask you, is it's accelerated the review of central bank digital currencies as one of the potential policy options central banks have around the world. Something like 90% of the world's central banks are in some degree of exploration of this policy option. And is this on the agenda in Kenya as well?
Absolutely. I think, but before answering this question, I want to pick up something from the last question. I think the most important thing is that we as private sector, as a public sector regulators, our objective remains the fundamental outcomes. That is things like financial inclusion, things like financial stability. So whatever happens in the ecosystem, we are always focused on those concerns. So from that perspective, we are agnostic to the technology that is there. So going back to your question, I think the CBDCs, this is a new sort of area that has come into the picture in the recent maybe 3 years or so. And it provides some potential. It provides some, let's say, possibilities. And we, like all other central banks, are looking at how this can help us address the more fundamental issues, like, as I say, financial inclusion, etc. But I think the key issue for these CBDCs is, will it improve financial inclusion, and will it help us reduce the cost of transactions? So anything that actually helps us or raises the expectation of speed of the transactions, completeness, reliability, and indeed lowers the cost, obviously something that should be supported, encouraged, etc. The question we have is, will the CBDCs really, aside from the hype, will it actually deliver on those? But we cannot dismiss it out of hand. And that means we have to explore it with other central banks. One of the key areas for us in the Central Bank of Kenya, we are looking at this more, not so much from the perspective of domestic benefits, because there we have a very elaborate, let's say, e-money system. Actually, from our perspective, we see that benefits would be more cross-border. If it can help us resolve that, that would really be helpful. But that means working with other central banks as well. So that is really how we are dealing with it. But again, the issue is not to be fast. The issue is to do it right.
Oh, that makes sense. And from the perspective of the National Bank of Cambodia, this question of CBDC, domestic policy, and payments innovations versus, managing in a cross-border environment, the best approaches of moving value.
I fully agree with what Governor Patrick mentioned about the use case of CBDC. I think it makes sense for developing country to use at least the retail CBDC to increase financial inclusion and promote, interoperability in the local payment system. Again, back to what I said earlier, when you have an efficient system, a private system in place, you don't want to go in and disturb, the system and risk to have unintended consequences, unknown consequences. But again, I think there is still a good use case for a developed country, for instance, and eventually for a developing country as well, for cross-border use of CBDC. I think this is something that we all try to achieve. But again, as Governor Patrick mentioned, it needs collaboration going forward.
No, that's thank you very much for your perspective on that. It's the question I always get asked in these panels is stablecoins versus CBDCs, and in this instance, it's CBDCs versus stablecoins. But you see central bank digital currencies principally as something that can reduce cross-border friction. And I think in that spirit, the question I have is, the second you execute a cross-border payment, the technology standard, which is ultimately the question we're debating on this panel, the payments infrastructure may be outside of your decision or your influence as a central bank. And that may potentially introduce unfair competition. One of the big concerns of many global payments projects or blockchain-based payments projects is that they're peer-to-peer in their very nature. How does a central bank and how does a country, on the one hand, promote financial inclusion, which may be possible through these international standards or emerging international technologies, while at the same time protecting domestic monetary policy and sort of domestic consumers as well? And maybe we can start with the Kenyan view, and then we can turn over to Cambodia as well.
Thank you very much, Dante. I think the one word that we need to stress is collaboration. We cannot do it alone. And so it means you need to be working closely with other like-minded institutions, central banks from our perspective. I think there's no going around that one. And in those conversations, and central banks are very much, they're very close in wherever, around the world. They are probably one of the close sort of, clubs that they are. And the conversations, they are kept confidential, etc. So everybody is safe, feels that their conversation would be kept safe. So from that perspective, it is important to work with others and then begin to establish what works and what standards are you going to adhere to. And I think in this, we have to understand that the central banks could be at different points. I'm talking of even in terms of technologies that are in place. And so in that sense, there's a lot more conversations that need to be held. So I don't see this as a quick fix. And that's why this is taking some time. And we're having conversations. It's true, there are a lot of experiments that are being done now, piloting in the sort of cross-border space. But I don't think there's any other way of going around it except just collaborating with others in a safe environment where you know that your concerns are going to be taken seriously, regardless of your size, regardless of other factors that may appear important in the current arrangements of global, let's say, affairs. So that's really the point I would want to stress.
Thank you.
I may not directly answer your question, Dante, but since you mentioned about CBDC and stablecoin, I just want to say that, the adoptions of CBDC as per its definition where, the central bank is liable to whoever hold it, there is a lot of uncertainty in terms of its implication now, the way we would conduct our monetary policy, right? Because we conduct monetary policy through the financial system, and here we're taking away part of the role of the financial system and do it ourselves. And we won't know your decision mechanism is going to be like. That's something. And I'm going to say something that is probably quite controversial in the sense that, there's a lot of trust deficit in the public institution nowadays. We've got the financial crisis started with it, where, there's the distrust in the financial institution, in central banks. And then recently with the pandemic, another distrust in the government with the vaccination program, and then the COP26, where there's a lot of unhappiness about the way government handle climate change, etc. And that is where you see the stable coin coming in, and it's going to make sense going forward, at least I would see for retail remittances. That would be something I think it's going to be very interesting to observe. Having said that, I think for the CBDC use case, cross-border CBDC use case, it could be very interesting for cross-border trade settlement.
No, thank you. And of course, trust is what underpins not only money, whether it's issued by public authorities or privately issued, it's what underpins so much of the way the global financial system works, and it has been on decline institutionally for the last decade at least. And I guess to build on the trust question, not that this question applies to either Cambodia or Kenya, but isn't there potentially an element, as many more central banks are weighing direct competition and picking technology winners and losers as they contemplate real-time payment systems infrastructure, and then which types of companies, banks, payment systems providers, techs, big tech, little tech, et cetera, can enter the movement of money? Are there some potential unintended consequences in picking winners and losers? And then what advice would you give the central banks who are listening around the world around getting the balance right between long-range policy goals and promoting vigorous competition and innovation in payments infrastructure?
All right. If you don't mind, I could go first.
Please.
Thank you. Briefly, I think it is important to appreciate that there will always be losers in each one of the technologies, each one of the schemes that you put out there. There'll always be some losers somewhere. In a sense, the law of unintended consequences remains with us. And I think this is where we need to identify where those unintended consequences are, and then put in remedial measures to deal with them. For instance, you can think of maybe unintended consequences in terms of people that will be excluded from the financial sector if certain technologies are put in place. Think, for instance, if the technologies, for instance, we are talking about even smart contracts, etc. You need a smartphone to run with that, and not a feature phone. Now, that already excludes a significant proportion of people in the low-income countries. And in some sense, you need to have remedial measures around that. So it is important for us to maintain our perspective. Secondly, in terms of what are the measures to put in to remediate those consequences. Secondly, it is important for the public sector to stay away from, quote unquote, choosing the technology, because that technology will actually be, it will run its course and eventually to be overtaken by other technologies. So in a sense, this is why it is important to be more agnostic about the technology and be more principle-based. What we've done in Kenya, we've spent a lot more time coming up with principles. And Her Excellency just mentioned some of the principles, such as interoperability, such as cost, such as security, etc. So there are specific principles with which you can use to measure or value or judge the technologies that are coming. Unfortunately, I have to be, in this again, to be a bit provocative, the conversation is less about the value add. The conversations today are more about the technologies. And I think that's where we are going wrong. At the end of the day, nobody cares about some of the technologies that we use every day. And think about the technology inside your iPhone. Maybe years ago we were very excited about it, but now it doesn't. Or even in your laptop, I don't even know what processor is running my laptop, and it doesn't matter in the end. It's doing the job. The value is in the outcome. So I think that's the way to deal with it. And it isn't just in this space. It is really across the board in terms of technology. Technology is our handmaid. It is not our master.
So well said.
I fully agree 100% with what Governor Patrick mentioned. I mean, at the end of the day, is what we want to achieve. It's not about the technology. And I think we, central bank, we're not the best experts in technology, right? And I used to actually joke, and it's true, is that the fact that Cambodia created an interoperable payment system using blockchain technology, everyone got to know about it. If I were to use a different technology, nobody actually would care, right? But the end goal is actually interoperability among the different players. And I think I agree with Governor Patrick saying that, we focus too much on the technology and not enough on the end goal and not enough on what we want to achieve.
Completely agree. I've long said that when we stop talking about the hardware and the software of this emerging internet of value and we start focusing on outcomes, then we know we have changed the world with it. So speaking of technology, I have a handy clock advising me that we're down to the 2-minute mark. And with those 2 minutes, maybe I could ask for any parting thoughts, beginning with you, Your Excellency, and then followed by Patrick on the subject of infrastructure, getting it right, and how ultimately events like Singapore FinTech Week enable the cross-sector collaboration and international connectivity that a lot of this necessitates.
I think my parting word would be there is no one size fit all. You have to understand what your system need, what your country need, and what you want to achieve, and not too much focus on the technology, but more on the end goal or the outcome of what you want to achieve.
Thank you. And for me, I think a couple of things. First, the objective or anything that really raises the expectation in terms of speed of payments, in terms of lowering costs, ease of transaction, or even interoperability, those sort of fundamental things, I think that is a good thing. At the same time, we need to focus, as we underscored just now, about the real fundamental objectives, which is financial inclusion and indeed ensuring that we don't destabilize the system. So those are fundamental. And the technology will help us. And the technology today will probably not be the technology we are going to be having tomorrow. So in that sense, we need to focus on these things. And there is a lot of potential for sure. The technologies that we have today have raised the expectation dramatically. And it is our business to work to make sure that actually we deliver this, let's say, these outcomes that are prospective to our vast population.
Thank you. Thank you. Well, I'm grateful to the two of you and grateful to Singapore FinTech Week for the occasion of sharing a virtual stage. Perhaps the next time around, we will be doing this in person somewhere in the world. Thank you so much.
Thank you.
Thank you.